Hey, what's going on, everybody out there in the world, ladies and gentlemen, men and women, males and females? Welcome to another video, Stocking with your boy, Prophet Peeps, where all the real smart investors gain more money, earn more money, win more money than lose money. Okay? Press the like button, bump the ground against that like button, share the video so the notifications can accelerate, subscribe to the channel so you can get more game when you see the bell ring. You see, well, make the bell ring, or when you hit the bell and the bell ring, or whatever it is. But anyway, how everybody doing? Happy Friday. I'm back, okay? I got to get back on teaching the people and talking to the people and giving y'all some real game. I've been making some money in this business, and I've been falling back, laying low, just chilling. And it's not a specific reason I've been falling back and laying low. I just been being a family man, you know what I'm saying? And getting to the money and, spending time with the family and, but it's time to get back to my people. I apologize to y'all if y'all been wanting me. Shout out to Casual Fredo. I was actually commenting under Gilly the Kid video. Gilly the Kid was giving a very great inspirational video about if you love what you do and if you got something that you do as far as, teaching people something or whatever craft it is that you're into, embrace it, do it every day, practice, be on it, become the best at it. And I indicated, this was about 47 weeks ago. This was like almost last year. I had posted I just started my stock channel or whatnot. And, I'm gonna make videos every day. And specifically someone wrote under it, Casual Fredo. Shout out to Casual Fredo. Go follow him. You know what I'm saying? And check his Instagram out. He wrote under there, you didn't stick to your word. You didn't stick to your word. In other words, and put a teardrop under it right there. He put the emoji with the teardrop and was like, yeah, you didn't stick to your word, man. And I was like, wow, damn. That means that people was looking. I'm not saying that people wasn't looking or wasn't watching, but that means that there's knowledge coming from brothers like me needed. So it woke me up and it says something to me. So thank you, brother. I appreciated it. I need that. I'm going to be on this as much as I could to try to give y'all some more game. And today I'm going to come back with a great one for y'all. And we're going to start part 1, part 2, and go 4 on out. Just to advise, I'm going to show you that I have been making money. I was investing in Canopy Growth. Not only that I was investing, I was trading. And I've jumped in and I snatched profits. And, y'all see that. I'm going to show y'all that in this video, which you should be able to see it now because I'm going to tag it right along while I'm talking. So y'all can see that I bought 500 shares. I jumped in, I jumped out. Jumped in the next day, jumped right back out, okay? And it's very important you do that in some cases rather than holding because the market have its way to to reiterate, to reset itself. And before you get caught up in that, you might want to snatch profits and hold cash. And I read a lot, I learn a lot, and I read a lot of books from successful investors. Even Warren Buffett indicated the fact that he only invested in 3 good stocks, and he hold those stocks, and he becomes successful off of those alone. So what I've been doing with stocks that I haven't been fundamentally involved in when it comes to really taking the company serious, I've been just watching the charts. I've been watching the charts and watching the patterns and knowing when to jump in and knowing when to jump back out. Rather support and resistance, that can trick you as well because new support, old support could become resistance or resistance can become support, So you got to be very careful of these things, very wary. And when you invest in good companies that when it comes to crisis like the pandemic, you won't lose as much as money. It will go down, you can hold it. And the sectors that you are investing in, such as like water or food sectors, these things people need to still eat during times of pandemic and hard times of crisis. So these is things that you really invest in. And you do your fundamental research, check earnings, the price to earnings, and so on and so forth. And that's how you consider yourself to hold or snatch profits. But we're going to I'm not going to be long-winded. I'm going to walk y'all through. I'm hoping y'all tuning in and going to watch this and learn from this. When it comes to chart patterns, I want to walk y'all through this process real brief, day by day, and let y'all realize when to jump in and jump out so you can make yourself some money for you and your family. All right, stay tuned. Okay, so when you see these, for those who don't know, just to advise, these are lower shadows, upper shadows. Okay, these are the candlesticks. Okay, when you see the upper shadow and the lower shadow, that means that it was a strong rejection on the lower end and a strong rejection on the upper end. So for the people who's buying will be the white, pretty much the clear one you see as a real body. And the people who selling off will be the dark body from what you see. So for instance, for those who use Robinhood, it will be, this will be the first one will be the green one. And then the second will be the orange one. Okay, so the people who's buying, it always opens at the bottom for those who don't know. So it opens at the bottom when you're buying in. It goes up to the upper shadow. And then in most cases, it will stop and close right there. But they made it pretty brief and pretty simple for you on the same level. But sometimes they close in different spots. So these skinny little candle where you light the lighter at and make, blow everything up according to the bomb. These skinny things is called the wicks. These little skinny sticks, they're the wicks. Okay, that means that it went up when it opened, right? It rised all the way to that top upper shadow. It rised all the way up to that top, and then it was a rejection. People wasn't trying to buy it that high, so they was rejecting it, and it was closed. So where it closed, that was in the middle. So now after it closed at the top, it opens when it's been sold. Okay, so it's been sold and it opens, the sell opens at the top and close at the bottom. Okay, so it was a strong rejection. So for instance, when it opened, it more likely went up, went down, like it went that high to the point that it was a rejection at the high level to be sold. So it went down, it was a rejection at the lower shadow, and we're talking about the dark body. We're talking about the dark body. This is the sell. It wasn't trying to sell that low. So it went in the middle and it closed out in the middle. And wherever it closed at, that's where another open coming at. So that's how that worked. That's how the candlesticks work. Okay. The beginning, when people buying in, it opens at the bottom and then it closes at the top, where when it's selling off, it opens up the top and closes at the bottom. All right. We have here the abandoned baby, which is bearish. All right. So from what we see here, y'all see now, right here, the abandoned baby is small. So it was like, usually if it was like in the middle at the bottom, it will be considered like as far as a bullish indulging or bearish indulging. Like if it was in the middle for bulling indulging, that will be considered a shooting star. It would be a morning star, actually, a morning star. Shooting stars is a little more bigger and at the bottom when it comes to the abandoned baby. But this is a great image to see. When you see this, you'll know this is considered the abandoned baby. You know it's about to go down. The chart is about to shoot to the drop, to the bottom. Pattern description. This pattern forms at the end of an uptrend. The pattern begins with an open candle showing the price closing higher than the open. Next candle gaps up with no overlap, the shadow of the previous day, and forms a doji. Okay, so it's a doji. The third candle is the series gaps low on the open and closes below the previous day low. Volume should diminish throughout the pattern and expand on the breakout. Okay, this pattern performs better when the price is trading in a more of a neutral trading range or within the primary downtrend. All right. Now, so we have here the abandoned baby right here. So this is pretty much close to a morning star. This is bullish. Last one we seen was this is bearish. The last one we seen is bearish. What will make it go down? Now this one will make it go up. Okay, this is the abandoned baby bullish one. So when you see this, you know that it's about to go up. Y'all see that it's closed and then it's open. Okay, but in the middle, you see the small little, All right, so you'll subtract the height of the pattern from the low of the last candle. Okay, this pattern forms at the end of a downtrend. The pattern begins with a closed candle showing the price closing lower than the open. The next candle gaps down with no overlap of the shadow of the previous day and forms a doji. The third candle in the series gaps higher on the open and closes above the previous day low. So y'all take a good look at that. Y'all see how it flexed right over and start climbing right up after that. So when you see a mark like that in this box, you know it's about to climb up. Okay, that's called the abandoned baby bullish. All right, and in most cases, some ways, like if the bodies was longer right next to it and that was in the middle, it will be considered a morning star. Y'all know about this. Okay, so here's another bullish reversal. This is bullish. Okay, now taller patterns with larger real bodies or longer shadows typically perform better. Shorter patterns, perform better than shorter patterns, measured by taking the difference between the highest high and the lowest low of the pattern. Measuring technique, add the height of the pattern from the highs of the last candle. Okay, so all you got to do is just basically see with your own eyes. You ain't got to do no mathematical type stuff. Just see with your own eyes that this candle is larger and there's a larger open than the sellout. So y'all see the sellout, the dark ones, they were selling out crazy. But then you got that long, taller wick. Okay, the arrows is pointing at it in the box. That's when you know it's about to climb up. That's when you know you in good presence. So you see that, then you say, okay, it's time to jump in and grab now. Time to jump in and buy. All right. Okay, so now that y'all seen the patterns, the charts, as far as the candlesticks, y'all learned a little something. I don't want to put too much on y'all. I want to make it brief so y'all can really notice stuff each video. So I'm glad y'all was able to sit around and watch for quite some time, me rap to my tape pop, as well as me show y'all about the candlesticks and the bullish and the bearish. Take this in consideration to know when to jump in and when to jump back out. I hope y'all learned something today, and thank y'all for sticking around. And most of all, winners roll with winners, leaders roll with leaders, and good followers always follow good leaders to become a good leader. Y'all be safe out there. Peace and love. Stay positive, and if it's negative, run. And I don't mean run like you scared. Run, get out of there, get away from it, because you know what it could lead to. You might just have the bad attitude to hurt the person, and next thing you know, you in jail. You might not know what that person got on them. Next thing you know, you dead. So just run if it's negative. All right? So peace and love, your boy.